We live. Is we? Come on. Where we at? Where we at? Oh, there we go. So I gotta come a little bit this way, y'all. Okay, we still in the middle. We still in the middle. I'm trying to make sure we live on both. Trying to see which one. It's kind of more like that, I guess. There we go. There we go. Now we in the middle. We in the middle, chat. We in the middle. Let's get us right. Let's get us right. Let me see if the Twitch gonna start. Nope, it ain't gonna start. All right, y'all. How everybody day coming along? Good morning. Good morning. Let me know if y'all can hear me in the chat. Just wanted to come in and talk about some quick things. You know what I'm saying? Let me check, make sure our own volume is there. Good morning, everybody. So I just made it public. I believe we live on both YouTube and Kick. So today, hope everybody doing okay today. Today is a Sunday morning, 7:26 down here. So hope everybody doing good. I just want to come to y'all, I guess freshen up. What to look for when you getting in the market. If you about to either trade or buy something. It's just things to look for that will basically give you like kind of What if something is down at a discount? Because of course, if it's at a discount, we want it. A lot of people scared of the market when stuff going to discount, but that's when it's time to really buy. Because think about it, if you go into a store, you want them Jordans. You know Jordans don't really go on sale. But if they was to go on sale, they gonna have a line out there. And you know how I can guarantee they gonna have a line out there? Because they have a line out there now, and it don't got no sale. It's crazy, huh? When you think about it. 1 second. Oh, I did. We still alive. We still alive. Yeah. So like I said, it's crazy because they have a line right now when they don't got no sale. So when you getting into the market, if we could treat the market like how we treat our regular habits of getting Jordans, buying jewelry, I think a lot of us could be living swell, not well, but swell right now because a lot of that money will be going into the market versus a lot of us are consumers that we definitely need to get out of that consumer spending because that's what this economy tend to thrive off of, us just constantly spending money. That's why they pump it out, get it in your hands so you can push it back into the economy. Like I said, you want that well-oiled machine, and that's what they do. It's a system they got in place. So we about to go straight into it. Like I said, I ain't gonna be on here too long, but we gotta go straight into what you gonna look for. And one of the things is for sure the fear and greed index. Let me see how I can show this to y'all. Let me see, face cam, no, right here. I'll put my face up right there, but this one of the things for sure. The fear and greed index, let y'all know. Okay, extreme fear, and extreme greed. When it's in fear or extreme fear, chances the market is at a discount. They got stuff cheap. It's not at all-time highs. When it's neutral, okay, things is in the middle. But at extreme, just like greed and extreme greed, prices is most likely close to their 52-week high. You're not trying to touch that. And speaking of the 52-week high, that's another thing that we will look for. But we look at this to know, okay, which way is leaning. So when we look at the market, we look at this like, okay, in the video, 188. They say it's fair, but it's not. That means stuff not at extreme highs, right? So we come down right here, 52-week range. That's 52-week low, 52-week high. So 212 is the 52-week high, but as you see, 188. This is still kind of a discount. That's what, $30 discount? Well, probably not $30, probably like $28 discount. But yeah, this is what you'll look for. You see that price, you see what the price was once at. Because 52-week high give you an idea. That's the highest the stock has been. Right? That's the highest it been. So if that's the highest it been, and right now we getting a discount, chances it will return to that 52-week high and will push beyond, way beyond the 52-week high if it's a good company. And that's the main thing we look at, good companies. You can look at the SPY, look at the top, Magnificent Seven, things like that, which in the video is definitely in that top 7, Magnificent 7, that move the market. Because like this go down, a lot of stuff gonna get dragged down with it. But this one of the things that we look at. So also, I showed y'all those two basic things. The price, 52-week high. So we know we're sitting close to 52-week high, but we definitely down in pricing, right? So you get that at that discount, and you can decide what's the discount for you, whether if it's 20%, 10%, whatever it is. Most people, like for that bear market, look at that 20% correction, 10%. But if it's down underneath that, it's a no-brainer. Time to get it. Especially if it's a good company like Nvidia. I had gotten Nvidia at $98, $99. I mean, I kept buying it when it was around that range. Every chance I got, okay, buy. I think right now my average is $101. But you see it went all the way back up. So when you see stuff on a deal like that, you gotta snatch it up. Don't let nobody tell you, oh no, this ain't gonna do this ain't gonna do that. Do your research. Main thing, do your research. And as a matter of fact, speaking of doing your research, you can basically come, let's see, look at statistics. You could come over here to see like their earnings, things like that. the profitability margins, all that. Like you can, that's how you research a company, the income statement, balance sheet, to know if they're in debt, they're not in debt, is they making money? Because a lot of companies, they're gonna have some debt, but you don't want the debt to outweigh the profits or the average revenue. Like I say, profitability. You want it to be making a profit. Now, mind you, you could catch some companies early on that's not really making a profit just yet, but you see they are slowly getting out of debt and they're becoming profitable. And when you see that, you know the stock gonna eventually be coming back up. And right here, this is another thing, the VIX. Y'all, please look at this. This is definitely important. Just like fear and greed index, because right now it's fear, so it's not high. But when this is high, I'm gonna show y'all. Let's see 6 months. So you see 30. What day this was? This was March 30th. Now let's see if we go find on the charts March 30th, just so y'all can see what it look like when the VIX get high, right? March 30th. So right there, somewhere in this area, boom. You see that? Look how low the market dropped. Mind you, 52-week highs. Do we got it on the charts? I believe 52-week highs for this is like 690. It got pretty close. See if I can find 52-week high on the. Look, I didn't even know they had the. No, I don't see it, but this how you know that VIX is important. You see how it touched that 30 VIX? You're gonna go back. March 30th, it touched that right here. Touched that top. Well, really, March 27th. We can look at March 27th when it really touched that 31. March 27th. Let's go find March 27th. March 27th is right up in here. Oh yeah, this is March 27th. So it wasn't at its lowest. It was at 633. But as you see, March 30th, this was the lowest it got, 629. And once that VIX started going back down, like my Monday 30th, right? Let's kind of make it add up. That's the 30th. And you see it starts to slowly drop down. Now let's go to where it kind of leveled out April 2nd. And this how you know I said the market tell you what it's doing. You just gotta look for it. I said April 2nd. Look at it, it was already back up. Right here. Boom. This is April 1st. So you see it April 2nd about right here. So it did started going right back up. So it let you know when it's high, just know price is gonna be low. When the VIX is low, price is gonna be going back high. So that's definitely things to look for in the market. Like I said, it got all kind of signs to look for. You just gotta know the things to look for, and look for them. That's all. And we can look at any other company. I'm gonna show in the video. VDA, and I guarantee you we could look for March 2nd, like we did. No, March 30th, like we did before. Look at it, almost the same, right? I got the levels mapped out from the video. Look at this, March 30th. 164. So that tell you it's time to buy. Don't miss the opportunity, right? Now let's go for April 2nd. Boom. Almost look like the just like the S&P 500. It started going up. Okay, started getting leveled out, and boom. Now we pushing off. And look where it went at. Now say if you would have bought when this stuff was high, which is 164, it only took us what? Not even a full month to return back to 188. That's why I stress it, y'all. Don't miss the opportunities. It's that simple. Just gotta know what to look for. Also, like say for example a trader, right? Say if you're a trader, but no, this is a whole different story though, for traders. Like a trend, following the trend line. If you see this from what, January 30th to February 26th. No, February 5th. The trend is going down. And it's showing you that. Trend is going down. Let's close off that. We're gonna go on the 5 days so you can see that trend even better. just like kind of consolidation mode. It ain't really trending nowhere. But once you see something like that pop, you follow the trend. Give it a little time. You see that trend, and you follow it. Okay, hop out. Boom. See what it's gonna do. It's gonna consolidate, consolidate. What it's gonna do. And right now it's still consolidating. It ain't really making no moves. But as you see, boom. You know what I'm saying? You gotta follow these trends. Even if it's something like slight like that. You see it's slowly making new high, new high, new high. That's the main thing also when it comes to trading. The lower lows, the lower highs, higher low, higher high. Look at those things. The charts, it tells you like this trend. 180. But it slowly kept on creeping down. Kept creeping down for what, March? I say about a week. That trend was on there. And that's why you set stuff like this. 164. I gotta probably back that up to show that that is definitely a support line. You see that? 167 support line. It broke 167. When it break that, the next one is right here. You see that? It's in a touch 164. So if you really do your levels and you map them out, they give you an idea. Okay, if it break this, it's gonna come to 160. That was my next thing. And after 160, I'm looking at 152. So it's like, it's kind of definitely, it's a game. And you just got to play the game how the game go. At the end of the day, play the game how the game go. But like I said, before you trade, you could look at fear and greed. Okay, people is fearful. And when people are fearful, that's when you want to be greedy. Because it don't make sense for you to be greedy when everybody else is greedy. I mean, we buying it all up. And if they buying it all up, what that's going to do? That's going to jack the price even higher. And that's pretty much how it's going. When they greedy, price is going to thrive because they know people are buying. And you don't want to buy when everybody else is buying. Because if you buy at the top, way at 52-week highs, guess what? Boom. And you lost all your money. And now it's going to start leveling itself back out. Look at drop again. So you don't want to buy up here. Now mind you, it's okay for you to, okay, it went down. Say for example, you bought right here. Cool. You say, you know what? Look like it might go up. And say you made a mistake and bought here. It's still 180, right? You didn't buy at the top. Or 212. So let's go to all-time highs for this. This 210, which is 212, like right here. That was all-time high. You do not try to buy up here. I'm telling y'all, that's the worst mistake. To buy way up here. Because it's bound to drop, pull back. Somebody gonna say something, news gonna come out, and it's gonna drop. So main thing is look at the all-time highs. You can look at the all-time low, but also support, resistance, support and resistance. That's one of the main things I look for as well. And I think that's mainly when trading, though, like support and resistance. Because like if you're just gonna buy a stock and it's right here, buy it. You don't need support and resistance. You don't need to know what it's about to do. You just know you getting this price at a discount. And that's all that matters. You know you're not buying way up here. Because at this point, it don't make no sense. But ask me how I know, too. Because at one point, I didn't know nothing. And I did buy up here. But that wasn't like a buying a stock. That was Apple. And I called myself doing an option trade. Which, you know, we live and learn. I bought an option trade. I think it was, what, 4-day expiration date? A week, maybe? I bought all-time high. That bad boy went zoom. And I mean, at this time, I didn't even know you could sell an option and get my money back. I thought I had to stay in the trade. So I think I only put 300. I let that 300 sit in there to see if it was going to return back. Nope, that's a mistake. But what y'all can do, now that I know you could take your money out, and I'm telling y'all, so if y'all in a trade, you make a mistake, well, you shouldn't make the mistake because I'm telling y'all, don't make the mistake. But say, for example, it's here and you think it's about to go up and you see it drop a couple dollars, you're like, no, it's going to break that support resistance. Guess what? Pull your money out. Really, 10-20%, that should be your risk tolerance to pull your money out because you don't want to lose more than that 20%. Some people got high tolerance, 30%, but that's more of the bigger dogs that's really been in the market, and they got that tolerance to lose that because they got thousands on the line. So if they losing that, what, 500 probably ain't a big deal. But yeah, y'all. So we keeping it short for y'all. You know what I'm saying? Keeping it short. Let me know if something I ain't touch on. I'm gonna definitely post some of these clips though. Let's go. Boom. We definitely gonna post some of them clips, but I just wanted to go over some of the basics with y'all. You know, so y'all get an idea of what you're gonna look for in the market. And those three signs, really like four. But if you buying a stock, if you buying it and not trading it, it's really just the three: the volatility, fear and greed index, and the actual 52-week high, 52-week low. That's all you need. And once you see that, boom, because you already got your company like Nvidia. It's a good company, so you know, okay, this company gonna be around for a while. Even Apple, you can look at Apple. Apple gonna be around for a while. Coca-Cola don't move like all these tech giants move. These tech stocks, they move fast. So like S&P 500, got a lot of these tech stocks. Like I said, and they tend to follow some of these big companies because they are the top leaders in that industry. Like S&P 500, you know, all these top Microsoft and all that. If they moving up, you're going to see the S&P 500 move up. So, yep, y'all. That's it. That's it. Hopefully everybody have a good Sunday. We about to be hopping off, and y'all will definitely be seeing some of these clips. And I appreciate y'all for watching the video. And the channel is growing, so I appreciate everybody that's part of the channel. And if y'all have any questions comment under the live. If it's something that I missed, because I don't got it 100%, but I'm letting y'all know the basic things to look for if you just buying a stock. When it comes to the trading, it's a different ball game. We definitely gonna go over that, but I'm definitely trying to get y'all started in the basics. Stocks, putting money in, automating it, so it's constantly moving. Because I know that's one of the things I've been definitely keeping up with. Also, building y'all emergency fund out. Like I say, y'all can start the 500. You can start 250, build it up to that $1,000 because you want to have an emergency fund, so you don't have to keep going selling your stocks and you're gonna get taxed on it. Even though you're gonna have the money, because a lot of people trade stocks, pay the tax on it. Okay, you got a little extra money you made off the market, but you are gonna get taxed on it. But you don't want to have to keep pulling your money out to buy or pay your bills and stuff like that. Which some people do trade just to pay their bills, but like I said, that's traders. They're not just buying the stocks. So we got a lot more to touch on, y'all. But peace out. Have a great Sunday. And we about to hop off here, y'all. Peace out. Peace out.